While video games have been something historically looked down upon as something only kids do, that's no longer the case. Technological advances have made video games better and more engaging and easier to play than ever before. And today, video games are a $300 billion industry poised for rapid changes. Today we're talking about no other than Take-Two Interactive. With $6.6 billion in revenues, Take-Two Interactive is the 10th largest video game company in the world. However, Take-Two's fortunes are set to change rapidly with the release of the most anticipated entertainment product in human history. Grand Theft Auto 6 is supposed to be released in November. Early reports suggest that pre-orders of the game have already reached $3 billion, an absolutely insane figure. Personally, I see an asymmetric upside opportunity in this stock. The stock has been essentially flat for the past year despite the bazooka of cash that's coming their way. After the release of GTA 5, the stock went on a generational run, rising 673% in the next 5 years. And I foresee the release of GTA 6 acting as a similar catalyst with Take-Two ready for the next leg up. And this is the reason why I'm buying the stock, and I have opened a 3.4% position in the global equity briefing portfolio. I bought it in the German stock exchange at 222 euros per share. I see a 128% upside in the next 3 years in my base case scenario, 185% in my mid case scenario, and the best case scenario I see 228 to 310% upside in the next 3 years. But before talking about Take-Two Interactive, let me tell you who I am. My name is Ray Myers and I have been writing about finance and investing on Substack for close to 3 years now and have 30,000 readers across platforms. I cover various investing topics and write detailed equity research reports on interesting companies. My goal with this YouTube channel is to bring my finance research to an audience that prefers videos over long-form text. In this Take-Two Interactive investment thesis video, I will explain why I opened this position. I will explain why I firmly believe that GTA 6 is a much bigger opportunity than Wall Street analysts say. And I will conclude with a valuation model that looks at 3 different possible scenarios. Before talking about GTA 6, I think it makes sense to talk about how successful the GTA 5 franchise was for the company. Over the past 2 decades, the Grand Theft Auto franchise has evolved into one of the most successful, iconic, and critically acclaimed entertainment brands in the world. Across this series, Rockstar Games have sold more than 470 million copies, with GTA 5 alone accounting for 230 million units sold. The game's commercial success was just incredible, with the game generating over $1 billion in sales in just 3 days, faster than any entertainment product in history. After that, the company launched GTA Online, which also was a massive success. This is a multiplayer online game where players do various missions together, competing with other online players. This sustained online engagement has allowed the company to generate high earnings for over 10 years since the release of the original game. And now they are on the cusp of launching GTA 6, which will be absolutely massive. It is without a doubt the most anticipated entertainment product in human history. Pre-orders opened globally in June 25-26, with rumors that pre-orders have already exceeded $3 billion in just a few days. Analysts expect 25 million sales on day 1 and 40 million sales over the next 12 months, but I think the reality will be much higher. In my opinion, the success of this game will be multiples higher than even the most bullish professional analysts believe, and will transform Take-Two into a top 5 gaming company. This is largely because of more favorable media landscape, GTA 6 Online, and GTA Plus, and in-game purchases. Let's start by discussing a more favorable media environment. When GTA 5 launched in 2013, the media landscape was much more complicated for game developers than it is now. It was more anchored in legacy TV advertising networks, physical retail like GameStop, and gaming journalism. The marketing campaign for GTA 5 relied heavily on billboards, bus wraps, and thousands of brick-and-mortar stores. As you can see in this picture, there was a huge line on opening night for the release of the game at GameStop stores. The digital ecosystem that dominate today's consumer attention were either non-existent or in their infancy. TikTok had not yet launched, and Twitch was a niche broadcasting site with negligible daily active users. Meanwhile, YouTube had 1 billion active users compared to nearly 3 billion in 2026. In contrast, the media landscape of 2026 operates on a decentralized, algorithmic networks that maximize organic reach. The emergence of short-form video on TikTok and live streaming on Twitch has fundamentally changed how entertainment is consumed and popularized. in today's gaming ecosystem. Gameplay clips, reaction videos, and community-generated memes spread through the internet at a rapid speed. Furthermore, the scale of the live streaming has reached global levels. GTA 5 itself has been the primary beneficiary of this trend, amassing 1.4 billion hours watched on Twitch in 2024, which was about 9% of all gaming content on the platform. Simply incredible. It's almost certain that GTA 6 will generate billions of views across these platforms. Truly amazing engagement will turbocharge the sales of GTA 6, achieving new records. Traditional marketing is no longer the primary driver of adoption. Instead, the internet's collective engagement drives compounding awareness. Effectiveness of this organic model was demonstrated by the game's initial trailer, which shattered viewership records by generating over 93 million views in a single day, and now it has over 300 million views. Simply put, these professional analysts who are on average older and less active in these TikTok, Twitch, and YouTube digital ecosystems are significantly underestimating the impact this new digital environment will have on GTA 6 sales. GTA 5 sold 45 million copies in the first 12 months, and honestly I just don't see how GTA 6 doesn't absolutely destroy this metric. As the industry has shifted, GTA 6 Online, GTA Plus, and in-game purchases will be a much higher revenue and profitability drivers than during the GTA 5 era. Although Rockstar does not publicly break out the GTA Online exact revenue, analysts have estimated that this game is generating around $500 million in yearly revenues from Shark Cards and GTA Plus even a decade after launch. Shark Cards let players buy in-game currency with real dollars instead of earning it through gameplay. This is a key source of revenue and a way for the company to attract high-value players willing to spend hundreds and even thousands of dollars on in-game currency. Imagine if a decade after launch, GTA Online makes $500 million a year. How much will a fully upgraded GTA 6 make? I think it's a multi-billion-dollar recurring revenue opportunity, and this seems to be ignored by analysts. Yes, there is some cannibalization with revenues from existing sales likely falling, but I think this is overstated. Furthermore, the industry is rapidly moving towards microtransactions. This strategy heavily exploits the fact that usually 5 to 10% of gamers generate the vast majority of all revenue, sometimes even more than 50%. These are customers who are willing to spend hundreds or even thousands of dollars to buy in-game currency, gold, crystals, special passes, or other things that help them improve their position in the game. By capitalizing on microtransactions, publishers can steadily increase the average revenue per user far beyond what a traditional one-time retail price tag would allow. For example, if a company would release a game that costs $500, nobody will buy it. And who wants to play a premium game that nobody else plays? Nobody, exactly. So it's very unlikely that a game will ever cost $500. However, it is very likely for a gamer to spend $500 inside the game because they want to be better and they want to have easier time playing the game. Gamers pay to elevate their in-game status with better items. Take-Two is positioning GTA 6 to rapidly expand this recurring revenue model by integrating GTA Plus subscription service directly into the game's launch. At the price of $8 per month, GTA Plus provides players with consistent flow of premium content in GTA Online, and players who pre-order GTA 6 get 1 month of GTA Plus for free. Crucially, this promotional month comes with an automatic subscription. So unless a gamer cancels subscription later, they will try GTA Online for a few months, and many millions of gamers who try will continue paying. And this is genius from Take-Two because they will acquire millions of customers for the GTA Plus online subscription service. Just from this one move, they could make billions of dollars. But of course, Take-Two is not just GTA 6. So let's talk about the whole company and their business model. Take-Two is a global video game developer and distributor through 3 main studios: Rockstar, 2K, and Zynga. In addition to GTA, Rockstar have also created hits such as Max Payne and Red Dead Redemption. Next, 2K is the most famous for its basketball-themed video game NBA 2K, but this division also produces best-selling titles such as BioShock, Borderlands, Civilization, and Mafia. Meanwhile, Zynga is Take-Two's mobile gaming arm responsible for huge hits such as Farmville. Zynga was acquired for $12.7 billion in 2022, but ultimately the deal is viewed as a failure, because the company significantly overpaid buying the mobile game developer at the peak valuation post-COVID mobile gaming boom. After the pandemic restrictions lifted, mobile consumer engagement and spending slowed across the entire industry. And this massive gap between expectations and reality forced the company to incur a staggering write-downs, a $2.2 billion goodwill impairment in 2022, and an even larger one, $3.6 billion impairment in 2025. Simply put, Take-Two overpaid for Zynga by $5.7 billion. However, we are starting to see a recovery. In 2026, mobile revenues recovered from the post-COVID slowdown, earning $3.3 billion and representing 49% of total annual bookings and growing 13.3% year over year. Overall, mobile will likely become a larger and more important segment for the company. While revenues from one-time sales remain important, the business is moving away from one-time sales towards subscriptions and in-game purchases. As we can see in the chart, full game revenues have been essentially flat since 2017, only growing by 10.5%. However, recurrent consumer spending revenues from subscriptions and in-game purchases have grown by 10x from $459 million in 2017 to $5.2 billion in 2026. While the acquisition of Zynga was a huge driver for this, we see that recurrent customer spending were growing even before that. The release of GTA Online, Rockstar subscriptions, and the upcoming release of GTA 6 are likely to be a massive drivers of this revenue segment. Next, to fully understand Take-Two's business, we need to talk about the game design cycle. So to reduce the overall risk and earnings volatility, Take-Two uses three distinct design cycle speeds to balance blockbuster volatility with steady monetization. There's the low speed, high polish cycle, there's the medium speed cycle, and there's the high speed cycle. Rockstar operates on low speed, high polish cycle. It releases games infrequently but ensures exceptional polish to build unmatched pricing power and game quality. Meanwhile, 2K operates on a medium speed cycle. It releases annualized sports simulation games to keep engagement high, while releasing sequels of core franchises every few years. And Zynga operates on a high speed mobile cycle. It uses live mobile analytics and direct monetization to generate steady daily bookings. And together, these three approaches help the company survive through this very cyclical and very hit-driven video game industry. Now, let's look at analyst estimates to see what results the company is expected to deliver in the next few years. So, Take-Two's CEO, Strauss Zelnick, has given out a completely sandbag guidance for 2027. This is clearly done to temper expectations in case of any unforeseen issues. They are guiding for revenues of 7.9 to 8.1 billion in the fiscal 2027, implying that the company expects only 1.4 billion in incremental revenues from the launch of GTA 6. Well, granted, there will be some cannibalization with GTA 6 causing lower revenues for all other games during the launch period, but just $1.2 to $1.4 billion in incremental revenues is significantly below my expectations, especially considering the information that the company has already received $3 billion in pre-orders. So I think it's highly likely that these estimates will go up in the next quarter when Take-Two can report to Wall Street the exact number of pre-orders it has received. And we will see that in the unearned revenue column on the balance sheet. And the funny thing is that even analysts see through this sandbag. Analysts expect revenues of $8.6 billion and net income of $1.2 billion in 2027. While this is $500 million above the guidance, it is still too low in my opinion. Most importantly, looking out to 2028 and 2029, we notice the real divergence between my opinion and the analysts. Analysts expect only modest 7% revenue growth in 2028 and a minuscule 2% growth in 2029. For such growth to materialize, GTA 6 sales, GTA Online revenues, and GTA Plus subscriptions and in-game purchase should significantly underperform my expectations. For example, at $8 a month, 10 million GTA Plus subscribers would generate $1 billion a year in recurring subscription revenues. Well, you think, what is the chance that we'll get 10 million subscribers? 10 million subscribers is a lot? Well, not really. For comparison, EA Play subscription service has about 12 to 13 million subscribers. And I don't see any reason why GTA Plus couldn't be significantly bigger than EA Play by 2029. At 20 to 30 million subscribers, GTA Plus could generate $3 billion a year. This would significantly increase margins and significantly increase revenues in 2028 and 2029. Now fellas, it's time for the fun part. Let's do a valuation model and let's see what kind of returns Take-Two investors could expect if I'm right in this hypothesis that GTA 6 will be a huge massive hit. So here you see my base case assumptions. I'm modeling a 55% revenue growth in 2027, 20% in 2028, and 10% in 2029. And I'm also modeling 26% operating margin in 2029. And the result is revenues of $13.6 billion and net income of $2.8 billion in fiscal 2029. Applying a 40 times exit multiple, we get 128% upside from today's share price of around $255. Of course, you can argue about what is a fair multiple. The EA was recently taken private at 20 times free cash flow. That was with the company basically not growing at all for 3 years. With the quality of Take-Two's portfolio, the durability of their franchises, and mobile gaming recovery, GTA 6, GTA Plus, and GTA Online, the company is in much better position to grow at a healthy pace for a longer period of time, and as such, I think it likely will achieve a much healthier multiple than EA did. In this scenario, GTA 6 generates $3.7 billion in incremental revenues in 2027 versus $1.2 billion in the guidance and $1.7 billion by analyst estimates. So I'm estimating $2 additional billion in revenues. This also assumes strong adoption of GTA Online and GTA Plus, and normal performance from the remaining gaming portfolio. While 128% is certainly a healthy upside in just 2 and 3 years, I clearly see a realistic scenario in which the company does even better. So let's look at the mid-case scenario. Here I model revenues growing of 65% in 2027, 25% in 2028, and 15% in 2029. And in this scenario, I also increase the operating margin to 28%. And we get revenues of $15.8 billion and net income of $3.5 billion in 2029. Applying a 40 times exit multiple, we get 185% upside. This also assumes very strong adoption of GTA Online and GTA Plus, but it also assumes a good performance from the remaining gaming portfolio. Now let's look at the best case scenario. What happens if everything goes perfectly, even better than I could expect? Here I model revenues growing of 70% in 2027, 25% in 2028, and 20% in 2029. Here I also model 30% operating margin in 2029, with revenues of $17 billion, net income of $4.1 billion in fiscal 2029. Applying a 40 to 50 times exit multiple, we get a 228% and 310% upside. I think in this scenario, a 50 times multiple is also possible if the company delivers such growth. Now let's compare all 3 scenarios. We see that the revenue difference between all scenarios is just about $3 billion, while the net income difference is just $1.2 billion. And this could deliver a massive difference in results with potential upside increasing from 128% to 228%. Overall, I see it as a very realistic possibility that this stock will increase by 100 to 200% in the next 2 to 3 years, and this is why I'm buying. And I have opened a 3.4% starter position in Take-Two in the German listing at 222 euros a share in the global equity portfolio. Well, that's it for today. Thank you for watching my Take-Two investment thesis video. A reminder that all my videos are also available as Substack articles. You can find the link in the description of this video. And if you disagree about my thesis on GTA 6, let me know in the comments. And subscribe and like this video. Thank you. Bye.